This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. This is a chart of Oracle. So Monday we came in and we had a little bit of a bounce, if you recall, in these IGV names. The IGV, big downdraft here and protracted downtrend in software related names after we had a massive hardware, semi-hardware in particular, rotation higher. IGV continued to kind of fail as the market was moving higher until yesterday. We came in and we had a very strong rally in the software names. Hardware took a little bit of a pause. Right here, IGV at 74.31 with a resumption higher, led by Oracle and Microsoft. But lots and lots of names. Tons and tons of chasing in the growth rotation, no lack of. So remember, this was the rotation of money flow out of software into hardware. Massive expansion candle in semis. Then we had a pause and a bounce. And you can see large expansion bar yesterday. 13%, I think it closed, and it's up another 7% this morning. Some are focused on the partnership with Bloom. I have seen that as a reason yesterday, Bloom Energy. But I'm going to go and take a wild guess here that this has to do also with ceasefire. And here's why. If you recall, data center was a very big focus of Iran escalation. And in fact, I would not be surprised at all if we might have had a ceasefire negotiated headline because of it. So in other words, we have a big structural damage going on in infrastructure over in the Middle East from the Iran war, but in particular, Iran is focused now on escalation of hitting data centers within the Gulf Arab countries. And I think that honestly is not being as, let's just say, included in the assessment that Oracle specifically has the most going on over there. So Amazon got hit, Oracle, I think in Dubai got hit. But the point is, a ceasefire helps data centers in the Middle East and our AI tech back home rise up from the dead, but specifically Oracle. And in fact, there was an article that I came across, which is fascinating, and it's on Substack. I retweeted it actually. Why Iran's blockade is an Oracle story. So you can see this got a lot of attention. Anyway, the point is, I think that this is also resolution of the market pricing in this breakout to all-time highs soon. And Oracle has been so sold in this AI narrative before we get into earnings that shorts are covering. We also have the Iran de-escalation supposedly by Trump escalating with the naval blockade, which by the way hasn't seemed to have shown up yet and or stopped anything because China went right through this morning without any interaction. So anyway, Oracle got a short covering rally of size and it is just continuing to fly. So some of you grabbed that Oracle chase, and I want to just kind of highlight over here about the monthly is 167. You can see it over here. It's a weekly chart, but it's 167 resistance. Anyway, you can see pre-market, it is flying right up into that level. So congrats if long. But the point is, ceasefire headline, whether real or not, helped data centers in the Middle East from getting further bombarded and AI tech and markets back home. We know about that. Oracle specifically, and I think that just kind of was interesting subtext note as it relates to the power of this advance. In the meantime, big picture, nothing's changed. We still have a massive risk underneath the surface, and I want to talk a little bit about that, but also first, this growth value ratio, which was rising up, and I said I can see this moving into 2.025. We're clearly going to be there this morning. PPI, by the way, came in, producer price index, on the soft side, even though it was expected to be stronger. CPI on Friday, PPI this morning, Tuesday. So they're not affecting the market. We don't really have a lot of economic data that's going to. If Fed isn't going to hike, they're going to continue to pause. They might talk hawkishly, but that's at the end of the month. Bank of Japan likely going to hike. That's at the end of the month. So these things are coming, but honestly, right now, the grip of momentum and this growth oversold bounce is where we're paying our attention. So we've got a 2-week growth rally that happened from February 24th. We caught that, every bit of that. And then it was a lot easier to see the rejection in IGV at the time because it was coming right up into this. Hit a monthly support at 77.89 for IGV and went right into tons of resistance. This trend line. So it was easier for me to say, okay, that's it for now. And then sure enough, software continued to fall during March. A little bounce first week of April. Why? Because we had that stabilization week. And then the second week, hardware took off. The money flew into hardware, especially on the ceasefire headline, and software got sold. But then don't forget, you got a lot of earnings coming up, and you've got Goldman out saying it's a generational buying opportunity. Remember what I wrote about that? That was actually the day before the ceasefire. I wrote US tech is on sale. Goldman says it's a generational buying opportunity. It was a Market Watch interview, and I profiled that. Goldman sees the weakest relative returns for US tech in 50 years. So we kind of, lucky or good, have seen and played this rotation from October, $0 club post into the all-time high in December. The value would outperform growth November, December, January, February, and then we'd get volatility March through May. Well, we got it for sure in March. Big tech would sell off under the surface. That's happened. And now it's very, very oversold. So the Mag 7 shorts that were most protracted on the downside, Microsoft, boom, look at that. Just had a big day yesterday too, and following through a little bit today. And then of course, Oracle. So those were big shorts that have now gotten some short covering treatments ahead of earnings. And because of the ceasefire, again, not taking out more of the damage in data centers in the Middle East. So it's all a theme. Plus they're doing a partnership with Bloom. That's true too. Probably the credit default swaps have come down. They were extremely elevated. That was the risk they put on bondholders that really was likely has paid off extremely well. So anyway, we've got lots of rollover here action in this instrument of this ratio that still says we can have some rip-roaring rallies like we're having, but it's not safe. So that's why I did my piece yesterday and said, okay, well, as I mentioned, when we were coming back above 6508, we can move into 6800. Then I updated that. 6800 now becomes 6900 for SPX. Well, we're going to be there. So now the irony now is everybody is out. Tom Lee is out saying, okay, the bottom's in. Yardini is out saying 7,700 S&P. That was yesterday. Today, Citi came out again, 7,700 at year end. BlackRock recommends an overweight on U.S. stocks from neutral. So as we're approaching all-time highs, you've got the big wirehouses and analyst houses saying tech valuation is cheap on a forward-looking basis. And we're going to go grab this because earnings are supposed to expand, especially in AI ecosystem, bigly. So you want to get a piece of this. Anyway, this is that post, the never-ending war meets generational buying opportunity. And then, today Think of BlackRock came out and said, by the way, institutional private credit demand is accelerating, and we've seen no change in Middle East sovereign wealth fund behavior and no withdrawals from sovereign funds to the treasuries. Long story short, they are saying the sponsorship in AI is safe. They're giving that all clear. So we've already had the gap up from the ceasefire. You can see it here, right here. And now we've got another little gap up today above 6,900. Now just keep in mind this 69.20 is the next little resistance. We'll see how that does. 68.85 is where we need to come back inside to see a resumption back to 68.07. So today the market is hotter on software continuing to rise up from the bottom, and semis firm, and dollars not in the way with yields, and PPI was not hot, CPI was not hot enough. And you've got the consensus Wall Street bulls are out loudly. And you got earnings also underway, JP Morgan, Goldman Sachs, etc. Goldman's second best profitable quarter ever. There are some weakness pieces in there as well. But the point is, you've got an earnings season that is excitable. and you've got a ceasefire headline that is probably not at all durable, and you absolutely had short covering and mechanical buying and gamma squeezes, but now the market has to find its fundamental reason to join the Wall Street consensus crowd. And that's usually when bulls enter and get trapped. Just saying. So I did a write-up yesterday, and yes, we still caution beats conviction, which is to say we've had this V-shaped policy intervention melt up, and it looks like nothing's going to stop it except maybe a nuke. But the market is very manipulated by headlines, by option trader, by insider trading, and basically by the Trump administration and all of their incentives. So you got consensus bills that are living in the now, and they are not likely to capitulate until we get the next shoe to drop on the supply shock and or earnings contraction, but specifically earnings contraction in their AI ecosystem darlings. Then the market cares.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.